This is Dr. T. Thanks for watching this video. On this video, we're going to learn about calculating tax rates and tax liabilities. Enjoy. First, we're going to walk through an example for a firm or individual with $400,000 of taxable income. We're going to use the tax brackets to determine what the tax liability is for that firm or individual. For us to actually calculate the tax liability for this individual, we need to know what the tax brackets are and the tax rates per tax bracket. So for this example, I'm going to use this worksheet. So for this example, I'm going to use this worksheet to calculate the tax liability for $400,000. In column A, we have the taxable income brackets. In other words, we give the minimum amount of income at the bottom of a bracket and the maximum amount of income at the top of a bracket. So again, in column A, we have the tax brackets. Tax bracket number 1 is a bucket. It's like bucket number 1. And in essence, you have to fill up the lowest bucket or bracket before you move on to any additional brackets. So the bucket number 1 or tax bracket number 1 starts with 0 income and goes up to $50,000. So, and the rate associated with bucket number 1 is 15%. So in other words, you pay 15% in taxes on any income that falls into bucket number 1. All right, and again, this is bucket number 2 right here. So bucket number 2 starts at $50,000 and goes up to $75,000. And the tax bracket on bucket number 2 is 25%. Again, let me go back to bucket number 1. Bucket number 1 goes from 0 to $50,000, and the tax rate on that is 15%. All right. So to put this in perspective, if I only have $10,000 of income, I can only put money in bucket number 1. And if I had $10,000, 15% of that would be $1,500. So that would be the tax liability on that $10,000. And if I have more than $50,000 of income, I fill up bucket number 1 or bracket number 1 to 50, and then any additional money will fall into bucket number 2. So again, any additional money will fall into bucket number 2. And so let's say I have $60,000 of income. I'll fill up all of bucket 1, and then I'll have $10,000 fall into bucket number 2. All right. Now, bucket number 3. Again, bucket number 3 starts at $75,000, goes up to $100,000, and the tax rate on bucket number 3 is 34%. Bucket number 4 goes up to $100,000, starts at $100,000 and goes up to $335,000, and the rate on bucket number 4 is 39%. And bucket number 5 is anything in excess of $335,000, and the tax rate on bucket number 5 is also 39%. And periodically in this country, as the Congress changes the tax laws, the tax rates on the buckets change, and also the upper and lower limits for each tax bracket or bucket can change. But for the purpose of our example, I just want to give you a chance to see how we calculate taxable income. The taxable income on bucket number 1 is going to be $50,000 because we can fill up that bucket completely. Well, to determine the taxes due, we apply 15% of 0.15 times the 50,000 and that'll tell us what the taxes due are. $7,500. So again, since we can fill up bucket number 1 or bracket number 1 completely, we have $50,000 in it. And to determine the taxes due to the government on that first 50, we apply 15%, take 15% of $50,000, or we multiply 50,000 by 0.15. And that means our tax liability on that first 50,000 is $7,500 left. So again, we subtract the 50,000 from the 400,000, and we have $350,000 of income left that has to be allocated to the remaining tax brackets. So bucket 2, 3, 4, 5. So let's go to bucket number 2. Bucket number 2 goes from 50,000 to 75,000, and so the size of that bucket is $25,000. The second bucket or second bracket is 25,000 because it runs from 50,000 to 75,000. Since we have $50,000 left, we can fill up bucket number 2, which is only $25,000. So again, to determine the tax liability on bucket 2, we multiply 0.25 times 25,000 and get $6,250. So that's what we owe. We're going to have $325,000 left after we fill up bucket 2 or tax bracket 2. So again, the size of bucket number 3 is going to be $25,000. And so since we have remaining income of $325,000, we will be able to fill that up. So now the issue is, what is the tax liability for bucket number 3? Again, our tax liability for tax bracket number 3 or bucket number 3 is going to be $8,500. And then we've got to figure out what remaining income we have after filling up bucket number 3. Our remaining income is going to be $300,000 after we fill up tax bracket number 3 or bucket number 3. So again, the size of tax bracket number 4, bucket number 4, is $235,000. We have remaining income of $300,000, so we can fill that up. So now the question is, what is the tax liability on tax bracket number 4 or bucket number 4? The tax liability on bucket number 4 is going to be 0.39 times $235,000, or 39% of $235,000. And that amount, so the tax liability on bucket number 4 or tax bracket number 4 is going to be $91,650, which we determine by multiplying 0.39 times $235,000, or in other words, we take 39% of $235,000, and we get a tax liability on bucket number 4 or tax bracket number 4 of $91,650. So again, so to determine the remaining income after we fill up bucket number 4 or bracket number 4, we take $300,000 and subtract the $235,000 we put into bracket number 4, bucket number 4. That leaves us $65,000. So that leaves us $65,000 of income to be taxed, and that income will fall into bucket number 5. Okay. So again, we have $65,000 that can go into bucket number 5 or tax bracket number 5. So we drop that in. And the tax rate on tax bracket number 5 or bucket number 5 is 39%. So now we want to determine the tax liability for bucket number 5 or tax bracket number 5. Again, our tax liability for tax bracket number 5 or bucket number 5 is $25,350. Again, our tax liability for tax bracket number 5 or bucket number 5 is $25,350. We determine that by multiplying 0.39 times $65,000. So at this point we have 0 remaining income to be taxed, and we can determine the total tax liability for this $400,000 of taxable income by adding up all of the amounts in column D. In other words, we add all of the taxes due for bucket 1, bucket 2, bucket 3, bucket 4, and bucket 5. Again, the sum of the 5 tax liability numbers from bucket 1, 2, 3, 4, and 5 will give us the total tax liability for the $400,000. So again, we add $7,500 plus $6,250 plus $8,500 plus $91,650 plus $25,350, and that will equal $139,250. That will be the total tax liability for this $400,000. If someone asks us what was the marginal tax rate for this $400,000 of taxable income, the answer would be 39%, because that is the tax rate associated with the last bucket or last tax bracket into which any of our taxable income fell. Sometimes we're interested in the average tax rate that a firm or individual has to pay. So sometimes we're interested in the average tax rate that a firm or individual has to pay, and that is different than the marginal tax rate. You can best understand the average tax rate as follows. If there were only one tax bracket, what rate would that tax bracket have to carry? We learned that the average tax rate for this individual was 34%. In this case, our total taxes due are $139,000, and our total taxable income is $400,000. So if we divide the $139,250 by the $400,000, we get 34%, or 0.34. To turn that into a percentage, we multiply 0.34 by 100%, and we get 34%. So that is the average tax rate. So with this exercise, we've demonstrated, 1, the difference between a marginal tax rate and the average tax rate. So in this case, the marginal tax rate was 39%, but the average tax rate was 34%. We've also demonstrated how you calculate the tax liability using the tax table, and we've given you the formula for calculating the average tax rate. And so we learned that the average tax rate for this individual was 34%. So again, we learned that the average tax rate for this individual was 34%. We determined that by dividing the total taxable liability by the total taxable income. So, or put another way, we determine it by dividing the total taxes due by the total taxable income. Put another way, we determine that by dividing the total tax liability that we calculated above by the total taxable income, $400,000. This is Dr. T. In this video, we learned how to calculate tax liabilities for a given sum of taxable income. We learned how to calculate or determine the marginal tax rate, and we learned how to calculate the average tax rate. Thanks for watching this video, and I hope you return to Dr. T Time real soon. Have a great day.